Ever wondered how billionaires save on taxes? Today we're going to unravel that mystery for you. You see, when we think of billionaires, we often imagine them sitting on mountains of wealth. And it's easy to assume they pay an astronomical amount in taxes. But that's not always the case. In reality, these financial giants often pay less tax proportionally than the average middle-class citizen. Shocking, isn't it? Now, this doesn't mean they're breaking the law. Far from it. Billionaires, like anyone else, have the right to minimize their tax liabilities. They simply do it on a much larger scale. How do they achieve this? They employ a variety of legal strategies, leveraging their vast resources and a team of financial wizards to navigate the complex world of taxation. Stay tuned as we delve into the specific strategies that billionaires use to save on taxes. Firstly, billionaires often save on taxes through income classification. So what does this mean? Well, instead of earning regular income like salaries or wages, billionaires often classify their income as capital gains. Now you might be wondering, what are capital gains? Capital gains are the profits made from selling investments like stocks, real estate, or businesses. And here's the kicker. Capital gains are usually taxed at a lower rate than regular income, making it a more attractive route for those with the financial flexibility to do so. But wait, there's more. This system also allows billionaires to defer paying taxes until they sell their investments. This means they can grow their wealth tax-free for years or even decades. So in essence, by classifying their income as capital gains, billionaires can enjoy lower tax rates and deferred tax payments. That's one way billionaires can pay less in taxes. But there is more to it than just that. Another common tax-saving strategy used by billionaires involves offshore accounts. You may have heard this term swirling around in finance news or in a movie plot, but what does it actually mean? Essentially, an offshore account is a bank account located outside one's home country. Billionaires often use these accounts to legally reduce their tax liabilities. The money stored in these accounts is often taxed at a lower rate, or sometimes not taxed at all. This is because many foreign countries offer tax incentives to attract foreign capital. Now, you might be wondering about the legality and ethics of this practice. While it's not illegal to have an offshore account, it becomes problematic when used to evade taxes or launder money. As for the ethical aspect, well, that's a topic of heated debate. While this practice may seem controversial, it's another way billionaires keep their taxes low. So there you have it, offshore accounts, a secretive world of money and power, all part of the billionaire's tax-saving arsenal. Finally, many billionaires make significant charitable donations to reduce their taxable income. Let's dive into this a bit more. You see, when a billionaire or anyone really donates a considerable amount to a recognized charitable organization, they're eligible to claim tax deductions. This effectively reduces their taxable income and subsequently the amount of tax they owe. But it's not just about saving on taxes. These charitable donations can make a tremendous difference in society, providing funding for education, healthcare, and other crucial areas. In essence, billionaires are indirectly investing in the future, fostering positive change, and contributing to the overall betterment of our world. This strategy is a win-win situation. The individual saves on taxes, and society benefits from the generous contributions. It's a beautiful example of how financial strategy can align with philanthropy. So, there you have it. 3 ways billionaires legally save on taxes. Remember, these strategies don't only apply to billionaires. With the right advice, you too could potentially reduce your tax liabilities. To sum it up, billionaires often save on taxes through income classification, offshore accounts, and charitable donations. They strategize their income into different categories: earned, portfolio, and passive income. They also take advantage of offshore accounts that offer lower tax rates. Their philanthropic endeavors not only serve society, but also help them benefit from tax deductions. Thanks for watching. Stay tuned for more insights into the financial world. And remember, knowledge is power when it comes to managing your money.